So to kick off, I'm just going to ask our esteemed panelists to introduce themselves. Perhaps starting from my left, working your way down the line, you can share a little bit about who you are, what it is you do, and essentially a little bit of a taste of what your company does.
Thank you. My name is Walter Beck, Nuridzinov. I am a co-founder and CEO at StormPay. At StormPay, we are at the pre-launch phase where we are planning to build an ecosystem of lifestyle applications where payments and finance will be embedded into the user experience.
Thank you.
That's good enough.
Yes, I'm Alex Reddish, the Managing Director at Tribe. We're a payments processor, I guess, across the issuing, acquiring, real-time payments, open banking space. So sort of a modern infrastructure player, if you will.
Thanks, Alex. And Derek?
And yeah, my name is Derek Stewart. I'm the founder of PaySme, and I've spent about 37 years in finance and tech. I know I don't look that old, but and seen probably every trend you can imagine. So what I've created with our company PaySme is really a fintech super app that brings together a suite of financial services to help underserved small business communities like taxi drivers or shops, market stall traders, small football clubs, rugby clubs.
Thanks, Derek. So I guess to get us started off, we have a very unique title, somewhat controversial. Why don't consumers care about fintech? Perhaps each of you could give your perspectives around why that is. Perhaps we start with Derek this time.
Yeah, so when we were doing this sort of the planning for this, they actually don't really care, and it depends who your consumer is. So my customers are small businesses. So if you think about a taxi driver, they don't even know what fintech is. It's just a word that someone's made up in the last 5 years. All they care about is, when I press the button, can I get what I need quickly because I've got someone in the back of my cab waiting to get out? And if I have a problem, can I ring one person to solve that problem? So from my perspective, they don't really care. They don't really understand it. They don't really even know what digital banking is on the whole. I'm not saying all of them. So in the sectors that we're in, we would call them sort of traditional, old-fashioned cash economies that need to transition to the digital economy, and they've no idea how to do it, and we're there to sort of give them a helping hand.
I think it's worth reflecting on what fintech is. I think if you go back to 2008, it's sort of digitization, disruption, and I think the output of that is a customer experience or a product. And I think, frankly, like I as a user, and there's 75, I did some research, there's 75,000 fintech employees in the UK, right? And like we care, but I go back to my life outside of work and I don't really care what fintech is. I just want a better user experience, I want a better product, I want a better engagement with my application. And I think fundamentally, if you take that lens to what is fintech, like who cares what we call it, right? It's the same with the Payment Service Directive or open banking. Like no one cares about the functional name of it, they care about the functional output.
And I think in general, when we as users go to a supermarket or want to buy a plane ticket, we don't do it wanting to make payments. We want to buy something, we want to have this experience of traveling somewhere, flying somewhere. And the payment is just one of the friction points we do to achieve that end goal. The less friction, the better the user experience. And I think the best fintechs are the ones that no one actually knows, that work in the background and do all of the jobs for them.
Yes, I mean, it's all about the experience, right? Nobody cares about these terms. Nobody cares what's happening in the back end. We really only care about, okay, I can do this by doing this. That's basically what we care about. But maybe let's contextualize some of the other definitions. Let's talk a little bit about embedded finance. What does that mean in your environment? And really, what does it mean to you? Otterbeck.
So, embedded finance is obviously, it's quite a big thing here in the Western market, whereas in the Eastern markets, you talk about super apps and all of that infrastructure which has leapfrogged from the traditional banking as we know here to the high-tech super app kind of environment. And embedding the finance into the actual experience of people's day-to-day product usage is quite important, and it's only catching up here in Europe with the introduction introduction of open banking, with the introduction of things like embedded finance and API integrations and everything. And I think it has quite a big potential here in the Western market as well.
Yeah, I think as a product, you're ultimately delivering financial services to a non-financial services company. But I think the fact that we as an industry are quite cognizant of it now is probably a reflection on the payments experience and that sort of digitization. Try not to talk about COVID and all of that today, but I think, like, if you think about the path we've gone on, or the journey we've gone on over the last 2 years, the last mile is now as important as the first, and therefore how you can deliver the 1% throughout the value chain, throughout the checkout process. That's where I think embedded finance has become a relevant topic, because now it's not just about how I find the right dress on ASOS, it's now, do they then have the right payment vehicles for me to allow me to do that within the app, without leaving the environment, without ultimately becoming a basket dropout. So I think it's probably a relevant topic now.
Gary, do you have anything to add?
Yeah, so when I started talking about super apps and embedded finance 5, 6, 7 years ago, people would sort of look at you as if you had two heads, because they were like, what are you doing? Why don't you just do one thing and do it well? But actually, if you think about the problem of the customer first, again, I'll use taxi drivers, but we apply this to multiple industries. They need multiple services that include finance, right? So I'll just go through a couple of them to give an example. So 1, we already do mobile payments. 2, we've got digital banking with debit cards, where we've partnered with someone like Railsbank. 3, we've got accounting and making tax digital with Untied plugged in. We have e-commerce, which we build on our own. We do insurance. We're going to be having our own insurance. We're now working on a deal for electric vehicle financing, because the taxi driver doesn't really know how to get the best deal to finance purchasing an electric vehicle. So we identify about 10 services, and because that whole supply chain is completely fragmented, that taxi driver has to deal with 10 different suppliers and doesn't really get the benefit of economies of scale, innovation, and usually just gets ripped off, actually. Whereas we can sit in the middle, and they're a customer, and we can say, well, we will fight on your behalf, and we will aggregate this, and we'll plug all these different partners in, and all you have to do is just press buttons. And if you have a problem, you press another button and you ring us. You don't need to ring 10 suppliers. So that for me, is embedding literally everything to do with financial services, and other things, actually, like loyalty, rewards, and you can just keep going and keep going. But now, because fintech or embedded finance has become more commoditized, you couldn't even do this 3 years ago. In fact, maybe you couldn't do it 2 years ago. Now, it's quite easy to plug and play these different services to build a better embedded finance experience.
So timing is everything. I just want to hone in on something that you were saying, Artebek. I mean, you work more in the retail space, you work more with consumers themselves. So what is the need, the problem really, that we are solving in that space for consumers?
It's, as I said earlier, it's reducing the friction from point A to point B. When customer wants some sort of experience, and the final destination of actually having that experience. And the main friction there is to do with the payments. Customer, if you take, for example, ordering a ticket, an airline ticket, or if you want to travel somewhere, you need to go to your price comparison websites and choose the best offer, and then go to the offer and fill out your personal details, fill out your payment details, and then make the purchase. It's all quite a long and complicated process, whereas all they want is to have an experience of a nice holiday. So why not to reduce that friction, make sure that fintechs or payment companies deal with it at the background, under the hood, without them even knowing, and they do what they want to with just a couple of clicks. That's our vision. That's what we want to achieve.
Fantastic.
It talks to hyper-personalization. Like, ultimately, you're trying to deliver an individual experience to the many. And I think that's where we get to, is now you have the data sets and the functional technology to say that even you as Tasneem, you might want the same service as Otterbeck, but you want it in a different way because of your personal requirements and needs. And I think that's where we get to, is a data-centric experience.
I think that's really interesting. I'm keen to hear a little bit more about the business perspective. So you mentioned about supply chain fragmentation, really, and how that has created these opportunities for business to play. And so, I mean, like, from a business perspective, we've heard the need from the consumer. I'm keen to hear what the need is from the business, and really, how does that play a role?
Yeah, so when you take old-fashioned industries that are sort of part of the fabric of your society, and again, I'm using cab drivers, market stall traders, high street shops, local football clubs, is that those industries have been around like hundreds of years, and they're not going to change overnight, right? So somebody needs to help them make that change. And actually, you could almost argue that although COVID was very difficult, it's actually become a catalyst almost for change, because, you know, if I take football clubs as an example, so a few years ago we went round and spoke with lots of football clubs about their supply chain. And the problem was, if you go to, like, we just recently launched a pilot with Stevenage Football Club in EFL League 2. And if you go to them, they'll have a small team. It's not like a Premier League club with hundreds of different departments. It's a small team operating on a shoestring budget. And they've got to join together things like ticketing, merchandise, card payments, loyalty and rewards. And really, they don't really know how to do it, because that's not the core industry. The core industry is putting a football team on the pitch to win a game. So that would be an example where we've sat down with probably 15 clubs from Premier League all the way down to non-league and worked out what their needs are. And they're usually common, obviously at a different scale. How you deal with 50,000 fans a week versus 3,000 fans is a different story. But really just asking them what the problems are and then figuring out how you join it together. And I would say technology and finance is at the point now where anything any one of you can imagine in the room can virtually be created within 6 months. It's actually got that easy stuff that you just couldn't dream of 10 years ago is just now plug and play.
I think that gives us a great segue into talking about enablement, which you facilitate enablement within your company. So we've talked about the data, we've talked about the business perspective, we've talked about how it's relevant for the consumer. So tell us a little bit more about how you facilitate that enablement.
I think from an operational perspective, we try and build consumer up. I think it's very easy to hide behind the next level of business and ignore what the end product is. So we're always very cognizant of the application of the product and the API. I think, to Derek's point, it's fundamentally easier to build an API than it has ever been. So our ability to deliver a sort of data, a real-time, insert buzzword here product is relatively easy. I think what we look at it now is almost an aggregation of product as opposed to just enablement of product. So, for us, it's now not just a 16-digit card number. There's real-time payments built on that. There's the open banking functionality that sits on that. And I think it's the evolution of the expectation of the customer means that we have to be always thinking sort of 6 months down the line, if you like, to use that time period.
So let's talk about the evolution of the customer. I mean, we've mentioned around here that we're sitting in a bubble. We're the only ones who really care about fintech as a term. Nobody really cares as a consumer about the back end itself. It's all about really the experience, how we take it down on that side. So the consumers don't really spend any time really understanding what it is that's happening in the back end. Do you think that there is a part that the consumer needs to understand? Because at the end of the day, we are dealing with a financial transaction. So whether it's seamless, frictionless, invisible payments in the background, is there a risk that we are creating for the consumer by them not understanding this?
Yeah, I mean, it's very difficult not to be political and say yes and no. I think obviously the less a consumer understands about who holds their money, who bears that risk and responsibility and liability, you are ultimately at the behest of education and whether you can educate that customer as to what the right things to do and how best to do it. I think we as an industry have tried and are improving on how we do that. I think we can obviously do more, but I think also, if we take an example of buy now, pay later, right? I'm sure there's been lots of talk about that this today. I think it's proof that as an unregulated product, if the product is good enough and the user experience is good enough, you'll see adoption. And I think the regulation follows that. And I think so it's our job to educate to the risks earlier on, because fundamentally it's impossible for a regulator to predict innovation. So we need to just be aware of that, I think. But yeah, it's impossible to say no to that, I think.
I think the risk is always there. Obviously, we need to think of protecting customers financially. But a good analogy would be, I think, driving. For example, a few years ago, in order to get your driving license, you need to know as much as a mechanic does. Whereas now, as long as you know how to check your oil and how to drive, that would be good enough, because the rest will be sorted out by your annual maintenance check. So I think customers should be aware to a certain degree what's going on in the background, and obviously they need to feel responsibility over their finances. But I don't think that they need to go deep into the nitty-gritty of technicalities on what's going on under the hood.
Yeah, I take a slightly different approach. So I used to be in hedge funds for like 17 years, and you look at the subprime mortgage crisis, right? You could kind of see that building years before, and sometimes the consumer has to be protected from themselves. Just because they want to buy it doesn't mean it's a good thing. And I had a similar conversation with a government minister. I won't say which one because he's in the cabinet, but when it came to the taxi space, I said, you regulate taxis, so you can't just let random people drive around in cars and pick people up because people think it's cool. Your job is to regulate it. You've chosen to regulate it. So I think with financial services, I think the UK is good that they've got a good regulator in the FCA that's not only regulates but also is quite innovative and encourages new ideas. So I think that should be some form of protection. But if you went out to a customer and said, like if we use the word, we're doing digital banking, they won't not understand what the financial services compensation scheme is. So we have so we're not actually a bank, it's an EMI license we're operating. So we really need to explain to them, please don't put all your savings in this business bank account because that's not what it's meant for. It's meant to be a transactional small business account. So I do think we all have a responsibility to be clear about that. But we also know in every single financial crisis there's ever been, there will be a percentage of people who just won't bother doing that. They'll kind of skirt around the rules. And I look at something like buy now, pay later. It's really just another form of credit. And I think ultimately that needs to become regulated. You know, people talk about innovation. You know, buy now, pay later. Like I was buying stuff out the catalogue when I was a kid, when I was like 8, right? That's buy now, pay later. We were getting stuff delivered to our front door, and I was selling fruit and veg and dry cleaning and delivering it. That's like delivery. So a lot of the things we're seeing today that we call innovation, they were actually, if any of you are old enough, they were all around 30, 40 years ago. It's just technology's made them more accessible and more commoditized.
I completely support Derek's point, but I also think that we need to look at the product perspective. When it comes to savings, when it comes to the credits and things like that, I completely believe that there should be a certain level of knowledge, and we need to tell customers what's happening. Whereas when it comes to the payments, I think payments has lower risks of something happening to the customer. And from that perspective, I don't think that the knowledge of the customers of all of the payment rails, of all of the different payment infrastructure and networks is quite important, and what's happening when they clicked on the buy button. As long as they make the conscious decision of buying something, we should take care of everything happening smoothly in the background.
So that's quite interesting. I mean, we said that there's an onus of education outside, but we're also saying that it's not necessarily needed for when it comes to certain particular transactions. Where do we draw that line, essentially, when it comes to things?
Well, I think that's on what kind of product. What kind of product needs more information and more education. That should be the question to determine where we draw the line.
I don't necessarily think there is a definitive black and white line between non-education and education. I think the level of information you need to provide is reflective of the product you deliver. I think, I don't think there's ever going to be a stage where you provide a financial services product and like, sod it, you crack on, mate, and good luck. I think probably bad form.
I do think there's some examples where you can see people are able to make that decision for themselves if they're educated. So if I take both of my kids who are like 23 and 26, they have their wages paid into like Barclays and HSBC, and then they might use, Monzo, Starling, whatever, for transactional stuff, but they're not having their salaries paid in there, which tells you something about they're able to decide for themselves how I manage my pot of capital. And one of the things I'd say is about trust, right? So where we've been paying these cab drivers every day, literally for 8 years, you then build up an element of trust, almost to the point where if they don't get the money at 10:30 every day, which is faster than pretty much anybody else, if it's like 11:15, they're on the phone, like, are you still in business? Are you still going? So it's interesting how you set an expectation and you make it really fast, and then the expectation just gets higher and higher. But I do think it all comes down to trust and how you conduct yourself as a brand and how you speak to your customers. And I do think a lot of, one of the risks I always see is when you get businesses that are on this kind of blitzkrieg, or whatever it's called, sort of approach where let's just get loads of money in, let's just hire loads of people, and let's just sell. I think you're setting yourself up for a major problem, whether that be regulatory, breach of trust, and you can see that happening every day in the market.
And also I think we need to understand what information is relevant for the customer, right? Like, for example, they really need to understand what happens at the background when they pay with their MasterCard or Visa card. Would we rather not educate them on more harms of fraud or identity theft or things like that? So I think educating them on the risks that are more relevant to them is more important than actually explaining the technical side of payments and financial services.
Yes, I mean, clearly it's about the trust factor, right? I relate quite a lot to what you were saying about there's a divide in terms of the older traditional banks and so on, and trusting them and going ahead in terms of where you put your salary versus what you're going to use as a novelty for bits and pieces here and there. So with regards to that trust, how do we go about building that trust in the fintech space? I mean, with this new technology, how do we go about doing that?
I think repeated good experience. Like, I think if I look at it from our perspective, it's about security, availability. If you look at it like living up to your brand promise, ultimately delivering the product you say you're going to do. I think a lot of it comes down to customer experience and customer service. Like, if you look at a lot of the sort of Twitter sphere of whether people are pro or against a brand, it tends to be about their response rates, how they interact with their user base. I think a lot of it comes down to we still want that personal relationship with an individual at some point. You know, yes, we're moving towards digital environment, but you still want to be able to. I don't think we all trust an application. We still trust the person behind the application. But you know, you listen to Starling this morning. They've got a couple of million cardholders now, and their primary spend is groceries, which tells you that people are using it as their primary account. So I think, you know, some of it is it's less trust now as much as laziness. You know, I've been in this space for 10 years, and I've still not left NatWest, and I couldn't tell you why.
That's a very fair point.
Yeah, I was just going to say, like, one of the things we found, so if you go back, like, I don't know, 8 years ago when we first started doing mobile payments and taxis, the only way to get those customers to learn, me and my mate, who was a black cab driver, we drove around 20 towns and cities for 8 days in a black cab and stopped at the ranks in the airports. And the further north you went, the less, let's just say, technology there was. And you would say, we've got this, we've got this, we're going to do mobile payments. And they get out their phone, and it was like one of those old-fashioned flip phones. It wasn't even a smartphone. Also, when it comes to give an example, like a lot of football stadiums have just for the first time, it's almost unbelievable. So like my team's Glasgow Rangers, and they only like 2 seasons ago, they started accepting cards in a stadium. It seemed unbelievable. They've got this brand, they've got 50,000 fans turning up every week, and it was still cash only. So a lot of the industries we deal in are face-to-face, and they actually, you build trust and relationship by going there. I go to markets the weekend and meet people who are market traders to talk about what we do and how we do it, because I like going to markets, it's fun. I like going to football, it's fun. So you're sitting watching the game, and on one hand, and I've got my phone in the other, checking how much we're taking around the stadium while we're watching the game. So there's that physical connection, and you build that trust. So although it's digital, those customers expect face-to-face, and that's why we do it, because we love the human interaction, not just the digital part.
I do think it's interesting when you look at like this new Klarna app that came out last week. I think that shows the progression of embedded finance and trust. Like they built what is fundamentally a widget on a payment gateway to allow people to buy now, pay later, or buy now, pay now, as they also now provide, right? And I think they went through a period of growth and acceptance with that, and now they've hit that point of inflex where they are now the brand themselves. And I think that's the interesting evolution now of what you see in terms of brand trust, but also in terms of bringing it back to the stage name a bit, I guess, the embedded finance principle. They've gone from an embedded finance payment method to the application, the super app, I suppose, themselves, to all intents and purposes.
And obviously, for us being a new guy in the block, the trust, how we build the trust is one of the biggest concerns we have at what we're building. And I think it goes down to delivering on what you're promising. If you keep delivering and achieving what you have actually told to the customer, I think that's when they start to trust you. And our kind of motto at StonePay is always to under-promise and over-deliver, which hopefully will contribute into building trust.
If not, just give away some socks. And
People love the socks. Yes, I mean, like you talked about where embedded finance is kind of going there. So, I mean, like, I'm keen to get your perspectives. Like, where do we see the trend moving? I mean, people say that COVID did a lot for technological advancement, but hopefully that's a thing of the past, sort of. So, what's next? Where's embedded finance moving to?
I mean, I think the user ultimately becomes this sort of embedded individual. I think we're talking very much about an industry perspective at the moment. I think you see things like sovereign identity on the blockchain. Don't ask me any questions about that, because that's representation of knowledge. But I think like this idea that you can ultimately move yourself around the ecosystem rather than the ecosystem move for you. Like I think you'd see that with this metaverse, this digitization of our daily lives. Like my expectation is that ultimately the individual will move themselves around the ecosystem rather than the ecosystem move for them.
I want to hone in on the ecosystems in terms of that. I mean,
Happy to
it's
talk
not a
about
new,
that on the other
it's
one.
not a new concept. Everybody knows about it. I would love to talk about partnerships and collaborations in this space. So, are we entering the space of the super app, as has been mentioned, or are we? And really, what does that mean for the customer now that we're talking about super apps in terms of all of these multiple things ingrained in one space?
Yeah, maybe I can talk about that. So if you think about the common problem from these segments that we are in is that they need finance and tech, and that the card payment rails are the same, the banking rails the same, the insurance rails might be the same. But what they really want, and this is where it's going, is this, Alex talked about it, is this super sort of personalization where they're in control of what features they turn on and off. And that's why we've gone down the route of creating specific industries and brands around one's, cab app for cab drivers, Marketti for market traders and independents, Fans Live for sports clubs. But one of the things I believe is that the customer, whether that be a consumer or a small business, they'll be in control of what they do. So one of the things we're looking at is saying, okay, you're a football fan, you've got the Stevenage app that you've downloaded, and they've only got you in that stadium for a limited amount of time, but you love that fan, perhaps me even more than you love your wife, right? That's so you might get divorced, but you won't leave that football club and change clubs. So once you've got that fan loves you so much that they'll do almost anything you want, right? But you've only got them for 90 minutes, a bit before and a bit. So we look at the idea of, well, when the fan leaves the stadium and then they go out in the evening, and your sponsor could be, I'm making this up now, like Camden Hills Beer. If you use the app or your card and you drink Camden Hills beer, a percentage of that revenue goes back to the club, for the stadium, for the kids team, the women's team. So the idea that your loyalty is following you around anywhere you go, and every time you spend, you're able to channel that either into cash for yourself, because you might just say, I just want it all for myself and I'm going to spend my own cash back, or enable you to say, I'm going to give some to the club, I'm going to give some to this charity. So the idea that you take control of all of your spending and your loyalty becomes yours, as opposed to Facebook monetizing you, Twitter. You get to choose how you monetize yourself, and you should be able to control that from a super app concept.
Which is fundamentally engagement, right? That's what we're talking about. Sorry.
Also, I'm not sure if this one is working. Yeah. Also, I was going to say that you can't build an ecosystem as a single player. You need to go into the partnership with other partners, other vendors. Even if you look at the big tech companies like Apple, when they want to introduce some financial applications, they're partnering up with banks and things like that. So I think partnership is very important, and if the aim is to give the flexibility, give more choice to the end users, you have to partner up with as many partners and vendors as possible.
Can I just add something on that? So about maybe 7 years ago, I first read Atom Bank are launching a digital bank. So I called them, got on a train, went to Durham where their office is. They hadn't even started yet. They hadn't even started hiring anyone. But I went up to say, tell me what you're going to do. Because I thought, you're just going to end up building another bank that looks like the existing banks. We don't need another bank that's the same. And they said, no, we know what we're doing. We don't need any help. Thanks very much for offering. And but the point of that was, since that day, I've been following probably every digital bank, waiting for banking as a service. I even had discussions with Wirecard. Thankfully, we didn't go do business with them. And then we finished up in the end working with Rails Bank, because they had sort of the rails, and they built the most customizable solution. But also, they weren't just doing it in the UK; they were doing it, in Australia and the United States. So as you collaborate, as your partners start to build out their geographical footprint, actually opens up the rails or the gates for you to start to follow them. Because if you try and build something in America where the rules are very different to Australia, if you try and build that globally and you're offering like 7 or 8 financial services, it is a real nightmare. So we picked partners that we felt were going to enable us to expand our footprint by collaborating with them. But you know, that took 5-6 years to find the right partner. And if we'd have gone with the wrong partner, i.e. Wirecard, it wouldn't have worked. Ironically, Railsbank ended up buying Wirecard's business off of them. So sometimes just being patient and diligent and waiting to offer the best possible product you can for your customers. You know, we spoke to Starling several years ago about banking as a service, and I think they've just released it in the last few months, I believe. So sometimes you just have to be patient and wait, and the market comes to you.
I think that is a great space to pause and see if there are any questions from our audience. Can we get a roaming mic over here?
Yep.
If you could state your name and if you are indicating that question to any of the panelists, that would be great.
Hi everyone, thank you so much for your insights. I'm Olivia from Fintech Alliance. Derek kind of touched on, in terms of fan bases and things, the idea of loyalty. But I wanted to ask a bit about kind of brand loyalty, and this is to everyone. If we're moving into an area where everything is embedded and frictionless, how do you still maintain that kind of brand and make sure that consumers know, you know, they're using your service, even if it is really easy and there's no friction to go through?
That's a pretty tough question. I think if you think about the augmentation of banks, fundamentally they're going to move backwards, and the question is how do you remain relevant to that? I think it's ultimately you will find a way to deliver value, and it's about identifying that value to the individual user. Fundamentally, we're a fragmented industry now, and we're going through this rebundling phase, as everyone calls it at the moment. I think it's about the identification of your piece of value and the overall pie. To use a really crap analogy, I think there are multiple ingredients in a recipe. You need to identify with each one of them to deliver the output. And had I thought about that, I'd have come up with a better analogy.
Sorry, just mentioned. So we've deliberately picked B2B sectors that are small in size, but actually big in terms of value. So there's about 106,000 black cabs and licensed taxis in the whole of the UK and Ireland. The industry is worth between 5 and 10 billion. Our customer is the taxi driver, not the consumer, right? If you start getting into targeting 65 million consumers across the UK and Ireland, you end up in a black hole very quickly, right? You look at the company's house and look up all the P&Ls of all the taxi apps. They're all just burning cash. So we've decided that we don't need to dominate the world. We just need to do something really good for like 20, 30,000 cab drivers and 10,000 market traders and 20,000 shopkeepers. And then that way, and there's not actually, you don't come across that much competition in these when you're, looking at it as a B2B play, when most people are looking at it as B2C. To me, it's a much more sustainable, low cost of acquisition, much more sticky, long-term customer base. And we've deliberately chosen to do that after years of research and years of planning. It wasn't like an accident, because trying to compete with the next shiny toy that's coming out in the fintech consumer market, and I would argue some of these brands spend billions building the name up. You get one thing wrong, and you're finished, right? It's not like the old days. So, and again, I'm not going to give any names, but I've seen this where they've built up. But actually, the whole brand has been built up and giving you 50% off a taxi or 50% off a delivery. That isn't brand building. That's literally just giving people, the VCs, cash for free. And you're saying, I'll use this taxi today because it's 50% cheaper, and I'll use that one tomorrow because they've got a discount. The consumer's picking all these companies off, and they're just smart enough to know where to do it. There was even a website one time you could log in and literally just get all the taxi discounts and use all the vouchers. That's not brand loyalty. That's not trust. That's just basically wasting people's money. So I think we've got to be clear about what brand and trust is and what it really is and what people think it is.
And to add on that, we need to define who the customer is. If we are interacting with an end user, the end user will become our customers, and all the rules of the brand building will still be relevant. But if you are saying that end users, the consumers, should not know about the fintechs, then they are not our customers. Our customers are those partners which stay in between, and we need to think about how we can earn their loyalty and how we can build our trust and brand value within our customers rather than end users.
Great. Any other questions from the audience? Yeah.
Hey guys, thanks for the discussion. Right at the beginning, you talked about that people, don't really care about the back end, although that's where the magic happens. They do care about the user experience and how they're interacting with the world. And with a lot of the technologies, it tends to be the killer use case that makes that adoption curve so much faster with contactless payments. People traveling in the tube, that became such a easy way of people interacting with the technology. Is there another sort of a killer use case that you see in the next 5 years that will enable more of the payments to be adopted by mass markets? A bit of a prediction from you guys.
My uneducated view to some would be around the digitalization of currency. I think if you look at CBDCs and that move towards the ubiquitous availability of a payment instrument, I think there's consideration for financial inclusion within that, but I think you see that on-ramp of growth there. I think obviously crypto, in terms of its ability to become not just an asset class but a fundamental use case within society, I think there's opportunity across both of those. So I think it stems from digitization. I think that's the next trigger of growth, but digitization of currency, not digitization of experience, but the fundamental vehicle with which we use as opposed to the application we use it on.
I take a slightly different view that the more this all becomes commoditized, someone was asking me about crypto. Like once cab drivers and market stall traders start ringing me up and saying, Derek, why haven't you got crypto on your platform? And they're all asking me, that's the day I'll find a partner and plug it in. But until then, it's just noise, right? So for my sector, I don't mean the whole industry. But what I almost feel that the more this becomes commoditized and faster and faster and faster, actually the more people will go back to traditional values of what is good customer service. It's certainly not hanging on a phone or speaking to a chat bot. So I'm a big believer that as humans we want to interact, we're social, and that the more this becomes commoditized, the more it will be about what other experience can you give me beyond the digital world, right? So if I'm going to come and shop at your market, you've got a DJ playing, or you've got craft beer and stuff like that. It's going to be about that real experience that you can touch and feel, and all the stuff in between is just going to happen. And therefore, that's the way I believe it's going, because I believe you can get to the point where everything's so digital. You seek different types of experiences that are real experiences with real people.
I think there are two aspects to that. One is the way the technology is developing, and the other is the way the regulation is developing. And in the points where there is a harmony, that's where the actual innovation is going to happen. The same can be told about the crypto. Technology is developing quite fast, but regulation is catching up. That's why we don't see quite a lot of adoption in that area. Where there is a harmony, I think the only limitation will be the imagination of people who want to create something.
And can I just add something very quickly? So again, I'm just going to use my daughter's experience. So what I would have done historically, I'm not really a big shopper, but let's just say I decide to go to the market, I would just turn up and randomly wander around and chat to people and see what they've got. If my daughter wants to go to the market, she's saying, what do they sell? What's she going to buy? What sort of food do they do? What's nearby to do afterwards? So what your phone allows you to do in these apps is basically plan your entire day so none of it's wasted. And then when you get there, you have an experience and you know what to expect. Whereas before, you just wander around and one day's good, one day's bad. It's a bit hit and miss. So I think that's what's happening is they're using, younger generations are using technology to have very, very specific experiences that they choose, what they want that to be. And they've checked all the ratings before. So they know when they get there, it won't disappoint. Whereas I think some of the older generation, we've had, many experiences where it's just been rubbish.
Sorry, we've got time, yeah. I think the other thing is talking about the environment in which they're transacting in. Like, if you go into this sort of metaverse principle of, like, if you've got ultimately a digital environment, you had Habbo Hotel like 10 years ago where everyone met and chatted and, interacted in a virtual environment. You now go on to Fortnite where they're hosting 30 million people conferences, right? The principle of micropayments, and when we find the right economic way to make that easy, so you can transfer digital assets between games and things like that. Like, I think we're answering this from a physical and a digital perspective, which is probably why we're on the panel, right? But I think it makes it quite interesting to see how that evolves, because my children are only 3 and 1, but I would expect them to grow up in a virtual reality environment, one which is wholly immersive, and therefore their need for transactional payments and growth in that, will be vastly different to mine. And your reference to contactless, I think it was 13 years before it became a ubiquitous product, right? So there's a bit of a ramp to that.
Great.
So we are out of time. I would love to thank our panelists for that interesting discussion. As you can see, we could go on for a lot longer. So I'd encourage you to kind of connect with us on LinkedIn, ask any questions that you want on there. And if we could all give them a round of applause. Thank you very much.
Thank you.